Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grubner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
This is the last full week before Easter holiday. Markets will be closed next Friday, right? Because of Good Friday.
That's right.
All right. So as we kick things off today, let's recap what happened this week in the markets.
Yeah, so somewhat a down market week for us in many of these commodities. If we start on the cattle side, cash cattle were down 60 cents this week. Those feeder cattle markets were anywhere from $1 to $2 lower on the week. We also saw weakness on the futures market this week with June live cattle futures down $1.55 and the May feeder cattle contract down $6.60. I think part of that was associated with what was a nearly 35-cent higher May corn futures contract on the week. On the beef side, the box beef price did gain $4.40. Stronger ribs and loins kind of led the way there for strength in that choice box beef. On the hog side, barrows and gilts this week were down nearly $2, and the May lean hog futures contract was down nearly $5. Pork cutout value also lost this week, down 47 cents. Really driven by what was some weaker belly prices again this week.
Very surprising to see what happened on the hog side of things, especially considering that hogs and pigs report that came out last week.
Yeah, that's right. So what was a very bullish report ended up with markets this week moving lower. So certainly not what many of us would have anticipated, and it reminds us that there are a lot of things at play beyond just the supply of hogs that matter. But I will still say that report is bullish in terms of tighter hog supplies as we look ahead.
How much is just kind of the uncertainty in the global market kind of factoring into what's been going on price-wise and demand-wise when we look at both beef and pork and other proteins as well?
Yeah, so I think you're right. That has some bearing on what's been happening of late as we continue to see inflation concerns, whether that's higher fuel prices or really higher anything. It I think has made at least some folks stop for a minute and think about what the best strategy is moving forward and what they're willing to pay for products all along the way, from farm all the way to retail.
Let's take a look at weekly slaughter numbers as we take a look at this week. A pretty just decent week for slaughter.
Yeah, that's right. If we look at the week ending April 9th, USDA tells us a run of 676,000 head of cattle this week. That's 37,000 head above where we were a week ago and 34,000 head above where we were a year ago at this time. On the hog side, a little lighter run this week, 2.430 million head of hogs to be slaughtered by the end of April 9th. That's down 4,000 head from a week ago and down 24,000 head from where we were a year ago at this time.
When we look at year to date, how are we running on that tally?
Yeah, so cattle slaughter actually up 0.7% year to date, while when you look at the pork side, Megan, we're down 6.2% in terms of hog slaughter. So very different picture in terms of hog supplies relative to cattle supplies.
When we look at that number on the hog side of things, I know we talked about the hogs and pigs report that came out last week. Does that really kind of set the stage for what's probably going to be more conversations about tighter supplies on the pork side of things moving ahead? Because I don't anticipate us catching up to last year's slaughter anytime soon.
Yeah, so for sure, I think we're going to be talking about running below year ago levels for most of the year. And for me now, this will become one of what's happening in places like China relative to what's reduced supplies here in the United States, and how does that all balance out in terms of do we end up with higher prices, or do we get enough of an export lag that we end up with prices not moving all that much? I think that's what we're really dealing with right now.
All right, let's talk monthly trade data. One of the big reports out this week, we just had two. As we take a look at that, I think part of that conversation is going to center around China again.
Yeah, that's right. Continues to be important. If we look at muscle cuts of beef in terms of exports for February, basically this year was unchanged for February relative to a year ago. We were down about 30 million pounds from where we were back in January of 2022, but somewhere around 255 million pounds of muscle cuts of beef exports out of the United States. Maybe a little bit of good news. We started January with really strong beef imports into the United States. Those fell 75 million pounds in February relative to the January level. Now, still got a ways to go because that February number is 75 million pounds above where we were February of a year ago. But on the beef side, the value was certainly higher for February. So good news in terms of the value, even though perhaps the export side wasn't that changed. On the pork side, we're kind of playing the same tune that we have for a while of what's weaker pork exports relative to a year ago levels. And as you alluded to, China's really the big player here. We're down about 100 million pounds in pork exports for February of this year relative to a year ago. And if we continue that trend, I think that's somewhat kept hog prices softer than otherwise would have been the case.
We knew and had anticipated coming into this year that China would continue to drop off a little bit on the pork pork imports of imports of U.S. pork. How concerning is that looking forward? And does that mean we need to continue to diversify our markets, find places? Because I mean, when you look at that monthly trade data, Mexico sure seemed to be a pretty bright spot on the pork side of things.
Yeah, that's right. It's interesting. We're really getting what was a China boom being helped by what's been very strong trade, to Mexico. Those two have almost been mirror images of each other in terms of when China was strong, Mexico was weaker, and vice versa. So we are getting some help from some other countries. Again, I will say, thank goodness hog slaughter's been down 6.2% year to date, or perhaps even the current prices we're seeing today would be even lower than we're talking about.
Supply and demand numbers from the USDA came out today. Not a lot of big changes on the grain side of things, but some shifts on the red meat and poultry aspect.
Yeah, I think we can start with what was pork production that for April is now trimmed another 250 million pounds this month relative to what USDA was saying back in March for this year. That does tighten up the supply side overall. Some of beef, pork, and chicken production down 125 million pounds. So even though we saw an increase in 2022 beef production, according to USDA, the declines in pork and chicken more than offset that. When you look at the sum of those for this year in total, USDA is saying we'll be down 0.5% in terms of those three meats and in production of those three meats. On the trade side, just as we've talked about, USDA reduced net exports of pork by 150 million pounds. So although we had less supplies, nearly offset by what was less net exports of products out of the United States. So when we start thinking about per capita availability, it's really unchanged from March to April, according to USDA for 2022. We did get some nice price strength in things like chicken prices this out of this forecast, as USDA now says chicken prices will be 31.5 cents higher than where they had them pegged back in March for this year.
Chicken prices were up, egg prices were up, turkey prices were up as well. I'm assuming a lot of that is the impact from highly pathogenic avian influenza as that continues to make its way through the U.S.
Yeah, so I think we're going to continue here in the near term, seeing strength in those prices until we can perhaps get many of these high path cases behind us. I think we'll continue to see relatively tight supplies, especially turkey. I think is one where we're seeing perhaps even more effects from high path AI in terms of turkey supplies available. So I do expect we're going to stay with these poultry and egg prices higher as we look ahead here in the near term.
Not a good sign for your chicken wings or our chicken wings in our household. But all jokes aside, I mean, this really is kind of set in differently. It's hit differently this time than it did the last time. Earlier, it's in all of the major U.S. flyways. Director Chin made the comment recently in an interview with Cindy here at Brownfield, talking about how this isn't going to go away anytime soon either.
Yeah, that's right. I think it's one we're going to live with a little longer than normal, and therefore we're seeing again more price strength than maybe we have out of other times when we've had cases of high path AI in the United States. So we'll stay tuned there, and I hope in a couple of months you and I are not talking about high path AI still, but we'll see what happens as the rest of this year unfolds.
Absolutely. Scott, that'll do it for us this week. As we look ahead to next week, what reports will we be watching for then?
Yes, we're on the consumer side next week. We'll get a cut of retail prices and then also consumer sentiment next week, Megan.
I have a feeling I may know where the consumer sentiment might end up in a week. So we definitely look forward to having that conversation. Scott, great to see you. Great
to see you as well, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions. For those of you who are watching the Facebook Live too, you can submit them as well. And for great podcasts while you're in the tractor or in the car like Scott, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner from Brownfield.